Hi everyone, and thanks for tuning in to another episode of Budget Investor. My name is Dylan, and I'm going to give you a quick overview of what's been happening in my portfolio over the last little while, and give you a quick update on what's happening with Netflix. Why is this a potential huge opportunity for everyone to invest in them to gain a bunch of money, and how will that fit with a budget investor like myself? So, as you can see on my screen here, the particular stock that is being shown is Costco Wholesale. Costco, like many other growth and value companies out there right now, or specifically technology companies, they have faced a bit of a dip in the last few weeks. Things have been pretty red for them, so they've dropped back down. But as a whole, my portfolio has still remained fairly strong. I still have almost $500 in unrealized gains, which is about 7% of my entire portfolio, which is fantastic. It is allowing myself to remain stable and confident in my investing. If we look at other companies, maybe TD Bank as an example, you can see they've really gone up over this last little while. So people are changing their money. They're not investing as heavily into those tech or those growth companies, but that's okay. That's why my portfolio is diversified. So when one area is going really crazy, I am not at risk of other areas going down. So of course you can see the bottom of my screen here and my portfolio performance. It breaks down by each stock. I have some major winners right now, like Pembina. They're up almost 28%. Bank of Nova Scotia 25%. CIBC 21%. And of course, I've got some losers that aren't doing quite so well, but I know a place like Costco, a place like Apple, they're not going to stay down for long, and they're going to come back up. Let's talk about Netflix. So Netflix had a pretty big news story that came out on Thursday, and they're planning to crack down on people that are sharing passwords. So this could potentially be fantastic news for us, the investor, to make a lot of money, or this could be really bad news. So we kind of need to look into this and see as to why. Netflix has typically been pretty relaxed in regards to people sharing their passwords, but now it seems like they're starting to crack down on it a little bit more. You're going to get a pop-up on your screen that's saying that they just want to ensure that you're using the account that is in the same household as the person that's paying for it. And they're saying right now about 30% of all people who use Netflix are sharing their password with at least one other person. They have 200 million subscribers, and that was their latest announcement in regards to total subscribers that they... Now, what that loss in revenue looks like for Netflix, and these are numbers that were reported back in 2019 in the third quarter, so things have changed a little bit, of course, because they've gotten even more subscribers since then, but it equates to about $135 million a month. Of course, Netflix has huge competition out there. They need to be careful with how quickly they push some of these potential clients away, because they might push them in towards another streaming service. Of course, everyone knows of YouTube, Hulu, Amazon Prime, Disney Plus, and they're their biggest competitors, and it's the total minutes of screen time that you've seen in the second quarter of 2020, and Netflix still holds the majority at 34%. YouTube's very close. YouTube's the second largest search engine in the world, and they get linked to from Google. Every time you look up anything on Google, you'll see a YouTube ad. Hulu, again, another fantastic streaming service. Same thing goes with Amazon Prime. And a huge up-and-comer that all of these streaming and video platforms are, of course, afraid of is Disney Plus. Disney Plus has a huge competitive advantage. Everyone knows of Disney. They have these fantastic programs and shows that they're always coming out with, and they always seem to be doing better and better than what they themselves were doing previously. Netflix has been steadily growing their subscribership over the last 10 or so years, and they were the first company to break the 200 million subscriber mark, which is fantastic, but they want to continue this upward trend that they've been doing. They don't want things to stagnate. They don't want things to slow down. They want to keep it going. They need to stay ahead of the competition because, again, Disney Plus is growing so rapidly. No one ever expected them to be so competitive. Now, the numbers that you're looking at on the screen here are just showing that who is using an account that they pay for versus they're sharing with a friend, family member, or a relative. And if you just take this by face value, it only shows that 47.5% of people don't share their Netflix account. And of course, these are a little bit different numbers, but it just goes to show the numbers that Netflix is publishing versus the numbers that I'm finding here. Again, it's showing a huge portion of Netflix's potential revenue or subscribership is not paying for their service. Again, Netflix has been so focused on growing over the last few years, and they've been growing so rapidly that it wasn't a major concern. But again, they have such huge competition coming in now that they need to be concerned of the number of people that aren't using their services properly. So what has Netflix looked like over the last month? Just like many other tech or growth companies, they've dropped a decent amount. They've lost about 7% of their value, which is about $40 in Netflix's stock. You know, that's not a huge drop. That seems pretty stable, especially when we've had this huge pullback in those growth and those tech companies. So that's a good sign. Their 6-month pace where they went up 4%. So really, if you bought 6 months ago, you've only lost about 3% over the last little while. That's not too bad. They're still looking pretty stable, which is a huge thing that a budget investor like us would be looking for. And with this potentially fantastic news, we can see that numbers rise back up. And if we look a little more long term, of course, Netflix is growing at an insane pace. 412%, $416 increase. That's fantastic. Now, if I was investing back in 2016 at $100 per share, that would have been wonderful growth. But does Netflix fit into a budget investor like myself right now? I'm not sure about that. They sound like they're going to be continuing to grow. They want to compete with Disney. They want to compete with Amazon Prime. They want to be that company, which is great. That sounds like a company that's growing, that's going to make me more money. It sounds like they're going to be pretty stable. They're making billions of dollars every quarter, every year. But their valuation is very high. I know previously I've talked about how, it might be worth saving up for a company like this. And you're right. I should look at getting into a company like Netflix. However, they don't pay a dividend for me, so I don't get that security piece that I typically like to look for. Plus, by the time that I'm able to save up all of the money that I require to purchase one of these stocks, this hype or this potential growth that's going to come out of this announcement that Netflix has made, I won't be able to capitalize on it. I'm going to be buying in high at that point. If I was already saving up, or if I already had a stock or two in Netflix, this would be a fantastic opportunity for me to make a lot of money, hopefully in a very short period of time. But for myself, because I don't have the money in my bank account or in my investing account ready to go, I'm probably better off using that money somewhere else in a company that's worth significantly less per share so that I can buy into it. If you're able to buy fractional shares, this could be a great opportunity for you to make a lot of money in a very short period of time. Hopefully this gave you some insight into how I will review the news that comes out about any particular company and how I evaluate that to potentially give myself an opportunity to make a lot of money in a short period of time, and how that might work with my budget investing style. If you want to see more information on this, please subscribe, like, comment on the video. Let me know, is there anything that you'd like to see? Is there anything that you could potentially learn from me? I'd love to share it with you. And of course, I'll see you in the next video of Budget Investor. And thanks so much again. My name is Dylan, and I'll see you in the next video.